Hi there, you're watching Market Cafe on ET Now, and over the next 1 hour or so, Priyanka Uppal and I will take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, let's take a look at what the Wall Street really did, and US indices largely closed the session in the red. A losing day is what we're looking at, because when you take a look at the S&P 500, 30 stock Dow as well, you're looking at a pullback coming in from those records in Thursday's session. So the broad market index slipped just about 0.2%. When you take a look at Dow as well, you're looking at losses of just about 0.1% coming in for that one as well, and nasdaq as well posted a slight decline coming in. So that's the kind of handover that we have on our hands. But when you take a look at fresh data that was issued, you do have that raising investors' fears that inflation was not cooling off quickly enough. That is quite the concern that we have. Of course, we'll be getting you more updates on the data that I just mentioned. When you take a look at Fed funds futures trading, that suggests a roughly 87% likelihood, though, that the Federal Reserve will dial back interest rates by a quarter point in November, and that is according to the CME FedWatch tool as well. However, central bank policymakers will, of course, be keeping a very close eye on additional data sets as well. So that will also be shaping the course on rates as well. Now, indeed, another catalyst, of course, since I mentioned data, awaits the markets on Friday morning US time. The producer price index, a measure of wholesale prices, economists polled by the Dow Jones do expect the PPI index to have risen 0.1% in September on a monthly basis, excluding food and energy costs. They forecast a 0.2% advance as well. And in terms of earnings, of course, you do have JP Morgan Chase as well as Wells Fargo that are on the deck. So those are the earnings that we're also waiting out for. So that largely is how the handover is shaping up to be like, at least when the Wall Street is concerned.
Absolutely. Morning, Shyansi. In fact, you know that the hotter than expected inflation, that has raised concern that how much is the rate hike looking like for the November meeting. Now let's understand all the economic indicators. They came in much more than expectation. Now, bond yield has also jumped in. It has gone to 4.1%. Especially a key comment which has come in from Atlanta Fed President Raphael Bostic on the central bank's strategy ahead. In fact, he talks about that he's comfortable skipping a cut at the upcoming meeting if the data warrants, because data is not that supportive. Inflation is not cooling as quickly as it was anticipated. It has come in more than expected. Monthly rise was just 0.1%. It has come in more than that, 0.2% on a month-on basis and 2.4% on a year-on-year basis. And now November is the time when Fed is also going to keep an eye on, because that's the time when the next Fed meeting is slated for. Now, Bostic said that he has penciled in only one more quarter point rate cut this year in the latest Fed data dot plot. Now, the projections that showed that 9 Fed officials, we recently saw that there were comments came in from the Fed officials. September's meetings minutes came in, when majority of them agreed, but there was a view. Now, 9 Fed officials were looking only for one more quarter point cut this year, while 10 officials, majority, pencil in for a 2 quarter point cut. Now, even before Bostic's comments, traders in derivative market had started to price in the possibility of a pause at either the November or the December policy meetings.
Well, absolutely. And when you do look at oil prices, you did have that climb coming in of just about 3% coming in. So whether you're looking at Brent, you're looking at those 3.6% uptick levels, and WTI as well, similar levels coming in, at least when oil is concerned. And that largely is the handover as far as crude oil is concerned. But moving on, then the key talking point this morning, headline inflation in the United States slowed on an annualized basis in September, albeit higher than expectations, a potential dilemma for the US central bank. Amid possibilities of more rate cuts this year, CPI decelerated to 2.4% versus 12 months ago, down from 2.5% in August as well. Month on month, the reading matched August's pace of 0.2%. Now, it was tipped to cool slightly to 0.1%. Meanwhile, the core CPI also unexpectedly accelerated to 3.3% on a year-on-year basis, hotter than forecast that it would be in line with August's pace of 3.2%. Meanwhile, initial filings for unemployment benefits also took an unexpected turn higher, hitting as seasonally adjusted 258,000 for the week ending October 5th as well, the highest total since August 5th, 2023. So that's the update coming in as far as that is concerned.
All right, so that's from the US majorly. Now let's shift focus, and in fact, move on. We've just spoken about the Fed President Bostic comments also, but then the way bond yield is trading at 4.1%. That's where the jump came in after especially the inflation figures came in. Now, but then moving on, let's get you the other stories also. And tracking is what we're tracking from here on. Of course, crude has moved on 4.1. Crude has also, in fact, let's understand, crude, in fact, rised over 3% on the supply risk. Is the Middle East tensions, though it looked like the rally which was spurred by this tension had stalled somewhere, but then now on the supply risk, crude oil rises over 3%. In fact, this entire scenario, the geopolitical tension wherein we have seen the crude was consolidating at lower levels, it had spurred, but then looks like it's still steady. But then traders are really wary of the geopolitical escalations which is happening in the Middle East. Talking about the gold, yellow metal extend gains on now rate cut bets. Now, gold snaps 6-session losing streaks also. Now, the major trigger will also come in from the earnings, which is starting from this week. JP Morgan Chase is expected to report earnings today. Let's see how earnings fare out. That will be the big trigger for Indian markets as well as from the US markets upcoming on.
Well, absolutely. Shifting focus then to some stock-specific action, Advanced Micro Devices, or AMD as we know it, has launched a new artificial intelligence chip that is taking direct aim at NVIDIA's data center graphics processors known as GPUs. The Instinct MI325X, as the chip is called, will start production before the end of 2024. Remember, if AMD's AI chips are seen by developers and cloud giants as a close substitute for NVIDIA's products, it could put pricing pressure on NVIDIA as well.
That should be a top story on a cause for concern also, that now the billionaire Warren Buffett's Berkshire Hathaway unloaded more Bank of America stock this week that takes its stake in the US banking giant below 10% now. Now, Berkshire sold 9.5 million shares, which is worth of $382.4 million for this week. Now, Bank of America investors must likely wait for Berkshire's quarterly financial reports or even the quarterly stock holding disclosures to learn if the company sold more on this.
Alright, then moving on, India mourns the loss of Ratan Tata, a towering figure whose vision reshaped our industries and whose values inspired millions. His vision paved the way for Indian industry on the global stage, and his compassion set the high standards of corporate responsibility. We gather voices from across sectors to share the reflections, then memories, as well as inspirations drawn from this remarkable legacy. Take a look.
Only 30 years ago, people said, how will JRD, who is larger than life, how can Ratan Tata ever deliver? Ratan Tata was scoffed at. So I think we tend to look at the exit image of a successful leader with the entry image of a new leader. And that's the fundamental mistake. It's the lens we use to look at the leader that is wrong. In my view, he has chosen a successor, at least in Tata Sons. Tata Trust, I think there is some decision yet to be made. And the roles of the trust and the commercial entity have been separated. I think his greatest legacy is that he has behaved like a relay race runner, not like a marathon runner. This is not a race that he was running on his own. He was carrying the baton, which he had taken from his predecessor, and he was determined to improve that baton before handing it over to successor, which he has done. So I think that's his great legacy. Thinking, acting and playing like a marathon, not like a 100-meter sprint runner, but like a relay race runner.
Learning that, how do you create value for the company without compromising on your values? I think that is a big learning for all of us, when we look at the life and times of Sri Ratan Tata. The learnings are essentially in terms of the corporate governance everybody's talking about, and also the indelible impression which he has left in terms of the philanthropic landscape of the country is also something amazing.
I had the good fortune of meeting him in 1985 for the first time. right? I was 22 and I was in my first job in Bombay, and there's a particular assignment which required me to meet him, and I was very impressed with A, how polite he was, and B, how focused he was. No wasting time. He would say in 50 words what others would say in 500 words, and meeting done, over and out. But always very polite.
You did not have to call him Mr. Tata. You called him Ratan. He was so humble, so feet on the ground kind of a person. He was a global leader in every aspect of the world. An amazing, long-term, forward-looking thinker, very strategic. He built enterprises in India, which demonstrated India can build global leading companies. And yet, he was a person you could have a one-on-one conversation with and feel as if you're with a close friend or a family member.
For me, when he invested in Ola Cabs 2015, then we started engaging. I used to go and meet him. There are two things I really, took away from him. Firstly, when, the founding of Ola Electric, my second company, is actually due to Mr. Tata. I said, sir, I want to start a company in EVs. And he said, Bhavish, I will invest in that company. And which he did. He always followed through on his word. And, every product that we built in Ola Electric, I used to go and sit with him and show the design, show the manufacturing thinking. And he was always so patient in walking through everything. And I used to wonder, how can a man like him have so much time? But, that's the kind of man he was. I mean, I'm having goosebumps just speaking about these memories with him. Truly one of a kind.
Of course, Ratan Tata, he was a national icon who's touched many lives beyond boardroom. We stay for a short break here. More to come on the other side of the break. We get your cues from the Asian market, and let's not forget, we set you up for the trading day today. Welcome back. You're watching Market Cafe on ET Now. Now, time to check the Asian cues. Now, Asia Pacific market opened mostly higher on Friday. Now, this is breaking ranks with the Wall Street's overnight session. Investors in Asia are also focused on the rate decision from the Bank of Korea. South Korea's central bank has cut its benchmark interest rate by 25 basis points. Now, how is Nikkei opening up with the gains of more than 0.5%? Kospi is up by 0.5%, nearly 0.5%. Now, Nikkei, you remember the last week, the major of the losing markets, one of them was also Nikkei. But on a constant basis, Nikkei is on a recovery mode for this week also, as well as just like in tandem with Indian markets. Now, the other set of cues will come from China as well as Hang Seng market. Hang Seng market is again up nearly 3%. This one has been on a tear. Now, Shanghai market, China market, which has also plummeted by nearly 15% in the last 2 days, it is also softened by nearly a 1% cut on Shanghai coming in. So, Asian markets, China being at the helm of the global markets right now. The set of cues which is coming in from from China is 0.5% of cut on that, but Nikkei on a recovery path and Hang Seng on an upward trajectory again with 3% of gains right now. Let's understand how is GIFT Nifty right now looking like, because we look like that we are set for a up move, but not a major point. It's nearly 30 points of up move which we can expect on GIFT Nifty. Let's see how we fare out, because largely from the cues which we have taken from US markets and the way we've closed near to 25K, let's see, it could be a shaky start to Indian markets also.
Well, absolutely. Let's see how that pans out for us. But let's get you some more news and updates then. Dharavi, a sprawling slum in the heart of Mumbai, stands as a testament to human endurance, where survival is an art honed to perfection. Dharavi is not just a slum, it's a hub of entrepreneurship and innovation. Transforming Dharavi would lead to significant improvements in quality of life, including better infrastructure, improved standard of living, and inclusion of the businesses there into the formal economy. Let's take a look at this report.
Dharavi, a sprawling maze of humanity and a symbol of resilience in the heart of India's financial hub, Mumbai, stands as a testament to human endurance, where survival is an art honed to perfection. Since the 1950s, multiple proposals have been introduced to redevelop Asia's largest slum, spanning more than 600 acres. But none of these initiatives made significant progress. But now, Dharavi is all set to undergo a transformation, as the government of Maharashtra takes bold and decisive steps to turn it into a modern urban space. This ambitious project aims to overhaul the region's infrastructure, improve living conditions, and unlock vast economic potential. Dharavi is more than just a slum. It's a vibrant hub of entrepreneurship, home to thousands of small-scale industries. This revamping would not only uplift the community, but also integrate Dharavi more seamlessly into Mumbai's broader economic landscape, maximizing its potential as a vital contributor to the city's growth.
Welcome back. Thank you so much for staying tuned in. Well, let's get a little more stock specific and let's get you some earnings updates then, because TCS net profit declined in the second quarter, missing analyst expectations with an inline revenue aided by deals in the energy, utilities as well as resources segments in its growth markets, the likes of India as well as APAC. Now, CEO Krithivasan also said that they're seeing signs of recovery in the BFSI sector. But first, let's get in Anisha to dissect the numbers then.
Well, it's a mixed set coming in from TCS this time. Even though the revenue has managed to beat expectations, there is a bit of a miss coming in on the margin front, and that has led to a bit of a disappointment on the bottom line as well. The rupee revenue came in at 64,250 crore thereabouts, slightly better versus our expectation. The dollar revenue stood at around $7.67 billion. We were working with a number of $7.66 billion, so broadly in line to slightly better on the top line. Where the company missed the mark was clearly on margin front. Usually the first quarter is the weakest quarter for the company, and second quarter they claw back the margins because in first quarter there's the impact of wage hike. But that did not happen this time around. In fact, sequentially, the margins have dipped a bit. The actual number came in at 24.06% as compared to 24.9% that we had seen in the quarter gone by. So margin disappointment is something which the street would like more clarity about, and that has led to the miss on the bottom line front as well. The profitability has come in at 11,909 crores. We were working with a number of around 12,040 crore, so almost 100 crore miss coming in on the bottom line as well. In terms of the commentary coming in from the company, well, they say that the cautious environment continued into Q2 as well. Where there was a glimmer of recovery was clearly BFSI, wherein the company is talking about how the company's biggest vertical, BFSI, has shown signs of recovery. They also saw a strong performance in the growth markets, and they stayed focused on sharpening the value proposition that they have been providing to clients. Samir talks about how the strategic investments were made in this quarter in the talent and infrastructure, and that is why there is a bit of a miss coming in as far as margin is concerned. But he's quite confident that the long-term cost structures remain unchanged, and they remain confident in the ability to continue delivering industry-leading profitable growth. In terms of the headcount addition, it was a number of around 5,000 to 5,500 headcount which was added in this quarter, and even attrition has come off a bit, which is just around that 11 to 12% mark on the attrition. So overall, a mixed set coming in. While the top line is strong, the margin is a bit of a miss.
Well, absolutely, Anisha. And since you mentioned some important commentary coming in from the management when it comes to the margins, let's go across and listen into just that slice of that commentary then.
Our experience is that yes, they're not the profit margin may not be as high as the major markets. At the same time, we've been able to manage overall at the portfolio level, and it's a market where growth will come in, and the kind of transformative engagements we do are very interesting. And as the volume picks up, Kawal, my guess is we'll be also able to manage the margin. Currently, also the volumes are low because of that SG&A expenses in the markets are slightly higher. Our expectation and the way we would operate is as the volume picks up, we should be able to manage our cost and improve the margins also.
Could drive growth in one portfolio and drive efficiency in another portfolio. Our intent would be to deliver a combined mix of growth and profitability in the aspirations which we have set.
All right, so that's a con call highlights. But Lala, let's get you some views from brokerages also. Now, there seems to be a divided view because what we see is that Investec as well as Citi, they've given a sell rating, but then JP Morgan has an overweight rating on TCS. First, let's understand what Investec has to say about it. They've hiked the target prices, though they have cut down, they've changed the rating to sell now. They've hiked the target price. And the major issue the near-term uncertainty persists, and the issue seems to be persisting for the larger clients especially, who've cut the scope on transformation deals also. In fact, manufacturing space also looks weak as major of the clients are cutting spending there as well. In this note, there's also spoke about that the consumer spending, which is depending on the holiday season, that also looks weak, and FY25 EPS, they've cut in by 4.1%, and that means roughly 90 BPS points in the EBITDA. Now, the view which has come in from Citi also is on the similar lines. Sell view target price has been cut further to 3935 now. They also talked about weak Q2 EPS downgrades likely, and in fact, the commentary related to the entire demand environment, that is still sounding very cautious, and they expect a modest and a gradual recovery only in IT services, and they prefer Infosys over TCS. But JP Morgan has an overweight view, though they have also cut the target price to 5100, but this one is on the higher side, other than comparing from the other two brokerages. Revenue down, CC on the quarter-on-quarter terms, CC was down, weakest quarter since COVID they've spoken about, but all the growth was led by sharply margin dilutive, and they've spoken about some contracts also, and they are talking about especially expecting, barring the BFSI segment, the tech growth to broadly recover, and at least a BSNL contract unwinding to help margin. This is what they feel in their report, and they have cut margins as well as EPS by 50 BPS points.
Well, absolutely. When you take a look at what Investec had to say, they've hiked the target price, and on the other hand, you do have Citi as well as JP Morgan that have slashed the target price as well. But let's get in more updates. Then monthly SIP crosses record level in September, past the 24,000 rupees mark. This as per the latest AMFI data, but equity flows were at a 5-month low. Mid-cap, small-cap schemes see strong flows for the second month. When you take a look at large-cap flows, they have fallen by 30% on a month-on-month basis as well. Sharad Dubey is standing by with that analysis. Then, Sharad.
Well, as the September's AMFI data is out, and important takeaways from this data includes a strength in retail sentiment as the monthly SIP numbers, they have hit the record high levels, coming at more than 24,000 crore on a monthly basis. Now, importantly, the equity flows, those numbers are down at a 5-month low, and the impact has been coming in because there has been a decrease in NFOs, especially in the thematic fund side. Now, looking ahead, the flows in the NFOs, those thematic funds have actually cooled down after 4 months of a strong growth. Over the last 4 months, they have added almost 80,000 crore in the system, but now that has cooled off, coming in at almost 13,000 crore rupees. A lot of other schemes are also coming in apart from the focused funds, and that is why that is down almost 27% on a month-on-month basis, coming in at 13,000 crore rupees. Now, the SMID schemes, the small and the mid-cap schemes over there, we see a strong flows coming in, more than 3,000 crore of inflows for both of these schemes, and this is for the second straight month the inflows have been strong. Also, but the large cap funds, if you look at it, there has been a significant drop, coming in at almost 13% drop on a month-on-month basis at almost 1,769 crore rupees. But overall, the AUMs, the equity AUMs, all have them at the record high levels, and the SIP has also been very strong. This is indicating that the overall retail sentiment is very strong, especially what we are gathering from our connects is that the number of folks below the age of 35, a strong participation is also coming in. So overall, very strong numbers when it comes to retail for the month of September.
Strong monthly SIP figures that has come in, but then of course the large cap flows has fallen by 30%. That also is one point to look at. Thank you so much, Sharad, for that details. We stay for a short break here. We get you all the brokerage news as well as the stocks which will be buzzing today in trade. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, let's get you some more stock-specific updates then as promised. And when you take a look at the stocks that are likely to be buzzing in trade, there's a long list there, and Ria standing by with just that list.
Good morning. So let's take a look at the stocks that are going to be in focus today. We have a lot of companies reporting their Q2 FY25 earnings. First up is Anand Rathi Wealth reporting quite a strong set of numbers. Now the AUM has come in at rupees 75,084 crores, up around 57% over the previous year. The total revenue has also seen a jump of around 32% on a year-on-year basis, and the net profit has also seen a jump of 32%, coming in at 76.3 crores. We also have IREDA reporting an inline set of numbers. The NII has come in at at 527 crores versus 360 crores in Q2 of last year, up around 46.4%. The PPOP has also seen a jump of around 26% at rupees 1,363 crores, and the net profit has also shown a healthy jump of 36.2%. On IRERA's front, they have also received an approval from DPAM and the Ministry of New and Renewable Energy for setting up of a wholly owned subsidiary for retail businesses such as PM Kusum, rooftop solar and other B2C segments in the renewable energy and the emerging renewable energy segment, including EVs, energy storage, green technology, energy efficiency, among others. We also have Tata Elxsi reporting an inline set of numbers on a quarter-on-quarter basis. Now, the revenues have seen a jump of 3% coming in at 955 crores. The CC revenue has seen a very subdued growth of 0.2%. The EBITDA has seen a jump of around 5.6%, and on the margin front, the margin saw a slight expansion of around 70 basis points, and the net profit has gone up around 24.6%. Let's also take a look at Utkarsh Small Finance Bank, which is going to be in focus since the bank is going to acquire a 7% stake in Saksham Gram Credit Private Limited. And lastly, we're also keeping an eye out on Exide Industries since they have invested rupees 99.99 crores by way of a subscription in the equity share capital of its wholly owned subsidiary called Exide Energy Solutions Limited on a rights basis. So keeping an eye out on all of these stocks today.
Very much, Ria, for highlighting all the stocks and the news behind them. Now, moving on, luxury cars or SIPs? That's the question Mercedes-Benz Indian MD and CEO Santosh Iyer addresses the buzz surrounding his comment on how SIP investments might be affecting luxury car sales. He explains why both SIPs and luxury cars are booming in India. Listen in.
India is in a well, okay, and if you look at all statistics, all reports, the number of billionaires, etc., we have a lot of billionaires in India. But of course, car still is not the first choice. The first starts from house. Then one wants to save for their social security reasons, and for that social security, for their end of retirement or for your children, you start with SIPs, which is great. A lot of consumers also buy cars with SIPs, as you rightly said. But of course, as marketeers, we would wish that, you know, with these cars today can be bought with 50,000 to a lakh of EMI. So, and there are many Indians who can easily spend a lakh of rupees as a monthly installment. And so, this question was an answer to why is the luxury car market not growing exponentially? We are growing, but is it not an exponential growth? And that can happen when the prioritization of spends or investments changes. We are still wanting to be a bit more conservative. Of course, the young population today is much more open. They have the YOLO life. So definitely you can see them spending much more. They don't look back and spend. But yes, that was the context of the comment on SIPs, I would say. But they are symbiotic, you know.
But I'm assuming you have both. You own a Mercedes and you have SIP also, right?
For sure, for my investment, absolutely.
Alright, then let's keep it going with the latest edition of ET Now on the go. The Pune edition, Thermax MD and CEO Ashish Bhandari then shares how the company's long-term vision post-COVID has driven it to accelerate investments in new energy technologies, and he also elaborates on the unique strengths or moats Thermax leverages across industries. Then here's a slice of that interaction.
For any company to stay young and to go through ups and downs and peaks and troughs of market dynamics, it has to have a distinctive moat. Yes. What are you doing at Thermax to really expand your moat so that in a competitive environment you stand out?
Okay. There are three particular skills to me that seems like that Thermax is good at. Yeah. First, Thermax's access to customers across the industrial spectrum of India. When I joined Thermax nearly 5 years ago, I was amazed that the company touches everything from food and beverage, pharma, chemicals, right up to the other end of steel, refining, and some of our largest customers. The spectrum of these companies, the way Thermax touches with services, with products on the energy segment, is something that is unique. Yeah, and so our ability to touch those customers through distributors, our direct teams, is something that gives us a strength. The second is its history of developing products. Yeah, India historically has not had industrial companies outside of automotive build good products. Thermax has that know-how of building good products and is getting better and better. And you will see some of these examples out here where we want to build products that are good not just for India, but can stand the standard world over anywhere. And we are doing that through our exports and everything else that we do. The third in my mind is engineering and technology, which means we can take on difficult problems, and boilers is a good example. Some of what we do in boilers is unique anywhere in the world. We work on cool technologies around absorption chillers, etc., which is very unique technology which we have done decades to hone and perfect. So our ability to apply technology, put them into products, and connect them with customers who we have access to, this trifecta in a way is our moat. Yeah, and this is the moat that we want to continue to spread around and add more and more products and capabilities as part of this.
All right, then let's move on and let's take a look at what makes it to brokerage radar. Then Indus Towers is what is the first one on the list, because Citi has maintained a buy on the counter, target price of 500 rupees. And in terms of what they're talking about the price correction that provides an attractive buying opportunity. And in terms of what's key to watch for the Q2 results, they're talking about the conclusion of VODA ideas, bank funding, as well as the waiver of bank guarantee requirements. So that is key to watch when it comes to the second quarter results as well. But in terms of what they're talking about valuation, then they're talking about how valuation is back to long-term mean level. So that is something that they're highlighting. And in terms of their peer comparison, then they're seeing Indus Towers trading at a 20% discount thereabout to other tower companies as well. So that's the word coming in from Citi when it comes to Indus Towers. Moving on, let's take a look at Kotak Mahindra Bank, because UBS has a neutral rating on the counter. They've also hiked the target price to 1,950 rupees from their earlier target price, which was 1,800. In terms of key headwinds, they're talking about NIMs as well as CASA, and credit costs rising also is something that makes it to their list of headwinds as well. Now, in terms of the stability in the core business, that is something that they see as a key re-rating trigger as well, and that is the word coming in. As far as Kotak Mahindra Bank is concerned, let's keep it going. Take a look at what else is making it to brokerage radar, and it's Credit Access Grameen next, because Nomura has downgraded the counter to reduce from neutral. They've also slashed the target price to 950 rupees from 1,100. They're talking about how there are too many headwinds when it comes to this counter, and they also have an uncertain outlook that they're penciling in when it comes to Credit Access Grameen. They're talking about asset quality that is also deteriorating, and they're also talking about MFI asset quality that has issues over the medium term as well. So those are some of the key issues that Nomura has flagged when it comes to Credit Access Grameen as well.
All right, so these are the key brokerages that you would eye on. But then let's understand, how is the FNO snapshot looking like? Ansh is joining us. Ansh, FIs are continuously reducing their long position. But then, of course, banks were on a tear yesterday. They've taken off the roof. But tell us the key levels as well as the action that you've gathered from FNO space.
That's right. They are reducing their position, but not just in cash market. In index future also, we are saying that they are getting bearish day by day. Because here we are saying in previous session, they have covered their long by around 23,000 contract. They have added some shorts by around 3,000 contract. So net to net, we are seeing addition of around 26,000 contract on downside. And this is the 8th consecutive session of net short additions of them, due to which the total long is at 84 session low, which is at 36% currently. Now, if we talk about retail position, that is client position in index future, then they have added the long by around 16,000 contract, and they have also added some shorts by around 4,300 contracts. So net to net, they are still net positive, and this is the 8th consecutive session of net long addition. So FIs are getting bearish, and DIIs retail positions are getting bullish in the market. Now, if we talk about Nifty, then if you can see the chart, Nifty has been actually hovering around that 50 DMA from last 5 consecutive sessions, indicating a sideways trend around here. So we need to cross that 50 DMA decisively to have some positive hopes in the market. Also, we have very strong support at around the 24,750, which is the September lows. Now, if we talk about option front, then we are seeing some call writing happening at that 25,200 strike, indicating option traders are expecting the market to take resistance around this level. Now, moving on to Nifty Bank, as you can see in the chart as well, similar to Nifty, even this index is hovering around that 50 DMA from around last 5 consecutive sessions. Also, if we see September lows is around 50,300, so that may provide some good support in the market. Now, if we talk about index options, then we are seeing some put writing happening at 51,000 strike price, indicating some support around this level. Lastly, if we talk about few FNO stocks that are in focus, then we are seeing significant long build-up happening in Kotak Bank, Laurus Lab and Indian Hotel, where short build-up for Cipla, Torrent Pharma and Ambuja Cement. So keep an eye on the stocks.
Well, absolutely, Ansh. We'll definitely be keeping an eye on the stocks. But while you're with us, let's also take stock of those F&O curbs from SEBI, the final expiration dates for Nifty Bank, Midcap Select and Financial Services, after which the NSE will only permit weekly expirations for the benchmark Nifty 50. Similar is the case with Sensex 50 as well as BankX. So let's take stock of all of those changes then.
Right, so both NSE and BSE are actually making significant changes to their weekly option expiry. So NSE is set to discontinue its weekly option expiry for all indices except for Nifty 50. This is what they have circulated in the previous session, last night actually. So here are the final expirations. Now if you see, the Nifty Bank's last expiration will be on 13 November. Midcap Index will be expiring last on November 18. And for Nifty Financial expiry, that is FinNifty, the last day would be 19 November. After these dates, there would be only Nifty which can be traded on a weekly basis and not this contract. Similar to that, even BSE had announced a similar circular in the previous week where they had said that they'll be removing all their weekly expiries. So for Sensex, the last day will be 14 November and for BankX, it would be 18 November. After this, they will not have any weekly expiries.
All right, thanks very much, Ansh, for that update on the F&O expiry moves that has come in. Now moving on to quick news. Israel pounded central Beirut with a deadly airstrike yesterday, leaving at least 22 people killed them and 117 were injured. The air raid on Beirut is the third such attack on the center of the Lebanese capital since Israel escalated its campaign last month. Moving on, Hurricane Milton has left a trail of death and destruction in the U.S. state of Florida, with reports of more than 3 million customers without electricity now. At least 16 people are reported to have been killed in the storm so far. Now back home, talking about PM Modi yesterday, who attended the 21st ASEAN-India Summit in Laos. At the summit, Modi announced a 10-point plan to strengthen ASEAN as well as ASEAN-India comprehensive partnership and asserted that ties with the regional grouping were critical for Asia's future.
Alright, then let's keep an eye on the sky as well, because heavy rainfall along with violent thunderstorms and lightning struck Mumbai on Thursday night following an alert for thunderstorms issued in several parts of the city as well. The sudden downpour took many by surprise, as the IMD had only issued a yellow alert for light to moderate rainfall in the city as well. Moving on, then, some sad news coming in for tennis fans, because Rafael Nadal, one of tennis's all-time greats, has announced his retirement from the sport, drawing the curtain on a storied career that saw him capture 22 Grand Slam titles. Nadal's final tournament will be the Davis Cup Finals this November, marking a fitting conclusion to his illustrious journey as well.
All right, on this, it's a wrap on Market Cafe, but don't go anywhere. We have an action-packed lineup lined up for the morning.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.